every market's going to be different, and then there's also different strategies that we look at too.
How can you take some of that Ritz-Carlton experience and bring it to your STR?
Because I don't look at a property like a single family home, like a primary residence person is. Like, I'm not falling in love with the ceilings of being high or the drapes. Like, to me, it's a financial decision.
Hey friends, today we're in the studio with Justin Mosley, founder and CEO of Leicestermore Capital, Jupiter resident, husband, father of 4, Navy veteran. We'll talk a little bit about that. And he's in the short-term rental market. He is an investor, also has a fund that invests in the short-term rental market with over 130 units. This guy started from the bottom, and we're going to be digging into that. It's going to be a fun day. Welcome.
Awesome, man.
Justin.
Thank you. Thanks for having me.
Yeah, thanks for coming in, and thank you for serving our great country.
Absolutely. Love being here, so happy
Appreciate
to do it.
Yeah, my dad's a Navy vet as well, and was also on a aircraft.
Oh yeah, that's right. Yeah.
Worked in the boiler rooms. Tells me all the terrible stories.
Terrible times, man. Yeah. So to be sitting here after being in like the reactor department is a beautiful thing, man. I can tell you that much.
Well, tell me a little bit. Let's just get started there. Tell me a little bit about what did the Navy teach you about business and self-development? Like, what have you taken from the Navy?
Yeah, actually a whole lot. So I think coming from Baltimore, the Navy really gave me a lot of like structure and discipline that I needed. It's funny. It's one of those things where most people think if you went to the military, you just automatically have those things. Believe me, there are a lot of guys walking out there that have been through the service and still don't have it, right? But for me, it was such a crucial part of kind of my development as a person is really having like the idea of like commitment, like consistency, getting the job done no matter what. I think that's one of the more powerful things about just the military. Like, it isn't all right, well, this isn't done, let's just like call it a day and go home. Like, no, whatever the case is, like, you have to do it until it's done. And that really, I kind of got that foundation in the military for sure.
Do you still make your bed like you did in the military?
I don't, because my wife does and stuff, because I get up at 4:30 and I go to the gym. But if it wasn't for that, I probably still would.
Well, tell me a little bit about, tell us a little bit about like your business, your fund, kind of what you're into and how you got started.
Yeah. So let's talk about how I got started. So after the military, getting out, I think like a lot of people, I was a bit lost in the sauce, right? Like wasn't a whole lot of successful people that I can look at as, I guess, role models growing up or anyone in my family. So I kind of went the traditional route of, how am I going to make money out of the military, right? Like, I knew it wasn't going to be a full career for me. I wasn't doing 20 years. Yeah. So the most obvious thing was go to college, right? Go to college, go to grad school, do that whole 9. And kind of fast forward through that, really I was in a place where I was working a job making decent money, but I wanted more out of life, right? Like my wife and I really talked about kind of what we want our life to look like, how we want to raise our kids, things like that. And really entrepreneurship, being an investor was really the only thing that made sense for us and stuff. And I think like a lot of people, I didn't even read Rich Dad Poor Dad, but I read Robert Kiyosaki's Cash Flow Quadrants. And that was definitely one of the kind of mind shifting moments where I'm like, I got to do something else. Like, this isn't the path forward for me. Yeah.
And so then how did you get your start in your first STR?
All right, so first STR. So I actually jumped into real estate on the commercial side first, so doing like multifamily apartment buildings and stuff, and was doing that and realized very quickly, man, you can make a lot of money in real estate in general, but the cash flow in those really large syndication deals are absolutely garbage, right? Like, it's all about, for your listeners that understand kind of commercial multifamily side, a lot of that, those guys are just bona fide flippers, a lot of them, right? Like, they're buying the property, They do the renovations, and then like 5-7 years down the road, everybody that's on the GP team gets like this big check, and it's like, all right, now you're just chasing the next deal, right? So while I was doing that, I was like, well, why don't I try something different? I've always kind of been a bit of a contrarian and like things that were a little bit on the fringe or is coming up, and short-term rentals back, 2018 was still relatively new, wasn't a whole lot of information about it, but what attracted me to it was the idea of like cash flow, right? Like actual money coming in every single month, like that residual after you pay all your taxes or expenses, mortgage and all that kind of stuff. And that was something that I was really appealing. And I was greedy. I was like, I can do this myself. I don't need to go get like 5-6 other guys to go put a team together. So I started off with a triplex in West Palm Beach, and I just rented out one unit you put it on Airbnb, VRBO, a couple other platforms, and it immediately works. So I was like, oh shit, like this is where it's at. And I just went all into it.
So you get your first, that's your kind of proof of concept in your mind. You're getting great cash flow. You're like, wow, this is great. Talk about the next step, because I know a lot of investors who have one rental or one STR, and they just have a hard time making the next step to get their next one. So,
which is absolutely crazy to me, because I would argue that like going from 0 to 1 is the hardest, right? It's like actually figuring out like what you want to do. But once you've done it, then to me, it's just about like replicating it, right? So for me, it was like, all right, well, this works, but why does it work? And then I'll tend to go pretty deep down a rabbit hole of like, all right, like, is it a demographic thing? Like, who are the people coming in that's renting for me and stuff? And once I started kind of work through those things, then it was just about scaling. And when I get excited about something, I just want to kind of roll and go all in. And then it went from like, it was a triplex. So like then I went to kind of condos, went down to Fort Lauderdale, did a couple down there. Didn't love it as much. It's a great market. Ironically, we're buying back down there again. But then, just kind of playing around, just buying different properties in South Florida. And then once I kind of really got a handle over like, all right, this is in my mind, like a new asset class, right? Like I always related to, was it 2012? So prior to that, single family homes weren't even looked at as like a real asset class from an investor standpoint, right? It wasn't until private equity was like Blackstone, all those guys really started like buying. Now those guys own like thousands and thousands of units, right? For me, it's like, it's that, but you actually get that real cash flow on top of it, right? So, and I've always thought single family homes is one of the safest bet out there, despite how risky people think it is. Like, no matter what, people always, whether you can afford it or not, are probably going to want to live in or buy a single family home, right? Like I have 4 kids. Right. Apartment is not an option forever, right? Like at some point you get to an age where it's like, all right, I want space and all that. So everything made sense for me in that respect. So it was just about just continuing to dive into it.
You're saying it's less risk from the standpoint, like if you needed to offload the property, you could liquidate it pretty easy.
Exactly.
Unlike
right.
like an apartment building or
you could sell it to an investor, or you could sell it to a retail buyer and stuff, right? Like for me, STR, another STR person that wants to get in. So it's funny, I get a lot of brokers that come to me and say, hey, I have this property this guy wants to sell. It's an STR. At this stage in my career, like I don't buy that because I believe in the value add strategy. So still taking those kind of fundamentals from multifamily, it's like I want a property in a great location that like I can actually force appreciate the value. And that's one of the other things I love about single family, right? It's like, unlike the commercial side, you can go into a market, and if you know what these other properties are trading for, I can, with some pretty good certainty, say, hey, if I do X, Y, and Z to the property from a renovation standpoint, I know where, generally speaking, the value is going to be. Yeah. So that's a massive advantage, because now I can go in and take a property that is, $200,000, $300,000, $400,000, $500,000 undervalued, put that value into it. Now I'm operating as an STR with all this equity into it. So I'm protecting my downside. And we don't have to get into nitty gritty, but I feel like you're probably, listeners are pretty sophisticated, but it's like now you're protecting that downside from a value perspective, but now just focusing on cash flow. And it's like, how can you lose that way?
Yeah. Now, if you buy it right in the right market and you force appreciate, I love that term, force appreciation, because that's the beautiful thing about real estate. Like, that's what I just love. Like one of the things that I love just as a lender is looking back on my pipeline. And we do this like every year, we run a pipeline, and I'll run all the clients that closed maybe 2 years ago and 3 years ago, 4 years ago. Then we'll run Zillow values of their current property, what they bought it for. And then we'll look at like how much they made. I mean, it's insane.
It's crazy.
Like it's insane how much like the average person can make in real estate. It's like the blue collar millionaire. Like it's the best way to build wealth.
Hands down.
For the layperson. And I mean, you can literally buy a house, 3.5% down, FHA, 4-unit property, but 3.5% down, get the seller to pay all the closing costs, maybe even get a bond from the state to cover your 3.5. Into it for 100% financing, controlling 4 units, live in 1, Airbnb 3, or short-term rental 3.
It's a win, man. To me, it's a no-brainer. Like I don't even understand why more people don't do it, but it's all good. More properties out there for us to buy. It is what it is.
I love the forced appreciation. And actually, that brings up another great point is, like you are, so a lot of the people that I talk to, my clients, they're real estate agents. So they're in the markets, they're getting listings, they're getting buyers, they're hustling. you would be considered like a whale client. So a whale client is like somebody who you could close maybe 5 to 6 deals a year with, because you've purchased over 130 units. Now, granted, they're probably not all in this area. They're probably all over the place. But like if I was an agent, like I'd be getting really close to you and bringing you deals.
Yep.
So from an investor standpoint at your level, like what are the deals that really would pique your interest? Or you'd be like, wow, I like that.
Yeah. So like I said before, any kind of value add perspective, like a type of real estate is always going to be in a great location, right? And now it's a lot harder to do that, but they're still out there 100%. I think the trick is that a lot of realtors, they don't change their mindset from that primary residence person to an investor, right? Like, so they just immediately think, oh, the property looks good. It's in a nice area. This is something good I should send over. Right. And they'll send it over to me. I take a look at it and I'm like, no, this doesn't fit the model. They'll do it again. And then they stop. Right. Rather than continue on, it's like I actually have a partner out here that I work with like locally and stuff, and he gets it. So it's like you have to kind of change your mindset into like, what is this person actually looking for? Because I don't look at a property like a single family home, like a primary residence person is. Like I'm not falling in love with the ceilings of being high or the drapes. Like to me, it's a financial decision. Like how much money can I kind of like squeeze out of this property from a cash flow perspective, but also to like how much value is there to I can increase it, right? So when you have people that actually understand that and it's a different mindset, like, yeah, you can find guys like me all over the place because they're, the real estate investors are a dime a dozen. Like now some obviously are transacting more than others, but you just have to think about it and position it the right way and build those relationships. And yeah, you can just work with one guy and make a crap ton of money just off that person because we buy.
Yeah, and did you use like tools like the AirDNA, like websites like that to analyze?
Yep, so that was how I initially got started. So AirDNA is kind of the gold standard of like the STR space, right? The gift and the curse is that they have the most consolidated data, but effectively all they're doing is scraping. So you have to get even more kind of granular in that, like actually understanding what are the differences between these properties, how can they truly produce, like who's the demographic, and there's so many different things. But once you start understanding those things, like you can quickly start understanding like what is the true potential of a property, and then it gets exciting because it's like, all right, well then how can I actually buy at a discount, which at this point in time is a great time, although the market's probably going to start heating up. But over the last year and a half, like I'm still buying at 7-8% financing, but if it cash flows, that's awesome, right? Because eventually I know rates are going to come down and probably it's going to ratchet up the appreciation. Yep. So then I can just pull some of the equity out later, have cheaper debt and keep on moving and stuff, But people aren't thinking about it like that. Like they just think high interest rates, like, it is what it is.
Yeah, there's opportunities in every single market.
Everything.
This market, next year's market, the year after, there's always opportunities. You just got to find them.
Yeah, 100%.
Do you look for like a certain amount of like average rented days per month? Like when you're looking at AirDNA data? And are you looking for like a certain average per night?
Yeah, but it's always like everything in real estate. It's so localized and market specific, right? So we buy in Florida, Louisiana, Alabama, and Mississippi, right? So I kind of consider it like Florida and the Gulf Coast minus Texas. Yeah. Every market's going to be different. And then there's also different strategies that we look at too. So we have a property we just acquired out right outside of New Orleans, and it's got actually 3 units on 9 acres. But like for us, we think about the potential in the future, right? So development. So I don't mind trying to get it at a discount, the property, and maybe not filling it up as much as possible because of the potential of the future, right? Whether it's development, also we like the event space. Like we don't hold events, but we'll partner with event companies and stuff. And I'm saying that as an illustration of like, it's so dependent on the market. That's going to dictate the strategy, and then we kind of use our baseline from there of like, all right, what's the cap rate we want to get this property at? What's the true potential? How long we willing to kind of like run, not being optimal until we get to that point that it could be an absolute home run,
Going back real quick to the, agents working with investors, what would you say, like if an agent's out there and he wants to work with more investors, like he really wants to put his time in and like, listen, I want to start working with more investors. I want to start finding deals and finding opportunities. What would be your advice to them?
It's a good question because normally I give the advice on the other way around because like I know the true value of realtors, like good realtors, right?
100%.
Like they can make me as much money as I can make them, right? Because I don't want to deal with the contracts and all the other stuff, right? Like there's massive value in like a good realtor that actually can protect you, because deals fall apart all the time. And I've had situations where people try to come after me for like escrow deposits and stuff, because it can get tricky, right? Yeah. And I don't want to deal with that. But I generally tell investors to go find, one, the realtors that really understand the kind of rental space. But from a realtor, I would say, find the investors that are actually shaking and moving, right? Like that actually doing deals. You're going to have to sift through it the same way we got to do with you guys. But also to really understand their business model, because you'll waste a lot of time just sending someone deals if it's not in their buy box, versus if you really can understand their business model and really kind of whether use like softwares or maybe your team to actually start sourcing some of these deals, whether it's like off market, quote unquote. Nothing's really off market anymore. At least I don't think so anyway. Or just like have a system to where you can actually like bring in something where you can see something that others can't, like from a realtor perspective. I think, man, like that's one of the best things you can do. And then that investor is going to want to work with you exclusively because they trust you. They know that you're going to protect them. So that's all I'll say for that.
Nice. Love it. So getting back to the like event space. So yeah, that's kind of interesting too. I've looked into some of those websites like PeerSpace.
Yeah, PeerSpace is a good one.
Like, would you say that would be something in addition to the short term? So you maybe have a property that has a larger acreage, so you're doing maybe short term on the house, but then PeerSpace for like photographers or other people that want to use it.
Yeah, 100%. And that's kind of been my crusade, I would say, especially in the kind of private equity, RIA space. It's like one of the reasons why I started the education course, not only to help, investors or just people in general that want to like actually do this themselves, right? I think the greatest value of real estate is actually ownership, right? Like there's all these kind of ancillary things around, but at the end of the day, especially if you have a W-2 or something, when you have real estate, like, and then especially with STRs, we can do like depreciation, bonus depreciation. Yeah. But like if you're doing it right, you shouldn't be paying taxes, right? Yeah. And I can say this, like I haven't paid taxes since like freaking 2017, right? Legally, because there's just so much value in that, right? Yep. But to go back to your initial question, it's like I look at the short-term rental space as so much more than just like Airbnb or segregating. Like it's this whole, it's a strategy of like not getting locked up in a lease, right? So everything in my eyes is a short-term rental if you're not putting someone in like a year lease or more, right? And, which gives you the freedom and flexibility to really operate one as a business, but then leverage the real estate for all the beautiful things, the appreciation, depreciation, all that kind of stuff, the tax savings. But then like how can you make as much money out of it as possible? And like you said, right, like event space, right? Like having your property where you could partner with like a wedding coordinator or event company to where you bring them business and you're getting a piece of that, and they hold the wedding on your property and they're going to pay you a premium over your nightly rate for that day. PeerSpace, what is it, like corporate events or, small business gatherings and stuff. You have a cool one, guys trips. I mean, these things that you can do actually like decreases the amount of wear and tear on your property, right? If someone's coming in to take photos, like they're not going to do a whole lot to your property, right? But they're going to pay $2,000, $3,000, $4,000, $5,000 for just a couple hours versus what you may get $1,000 for a whole night, right? There's so much value in just looking at it from that perspective, and there's just so much money to be made. Like it's always shocking to me. I think it's just the fear of the unknown a lot of times of people not understanding the space and not seeing the true value and potential in it.
Love it. Yeah, I mean, rental properties, especially in short term, it's like you have so many income streams. Obviously, the rental, you have the appreciation, and then what you talked about is the tax savings. Yeah. Because short term rentals, when it comes to tax, they're an active real estate investment versus a passive real estate investment.
Yep.
And if you talk to your CPA, obviously I'm not a CPA, but if you talk to your CPA, an active real estate investment can offset a lot of W-2 federal income tax. If you're showing losses in large depreciation, you can roll that through
100%,
and you can save a ton of money. So it's funny. Last year I had this guy call me at the very end of the year, like December 15th, and he's a high W-2 income earner, from up north, and he's like, hey, listen, I'm looking at this $1 million property, but I got to close on it within a week because I have to get so many rental days in. But I'm like, what are you doing? Why are you doing this? He's like, oh, well, my CPA, I need to get the deductions because I want to do, I got to get the cost segregation analysis done. Got to get the engineer out there. And I have to get enough rental days before the end of the year so I can show this write-off. And, the cost segregation on that place is probably going to be like $300,000-400,000.
Oh yeah.
Which he could literally pull that over on his tax returns and save, a lot of money.
Yeah, 100%. Because it's going to reduce your actual taxable income and stuff like that, but simultaneously reducing your taxes too and stuff. It's amazing. So I don't know why the IRS wrote it that way, because I don't think they anticipated ever to be truly a business. But I'm happy and I don't want them to touch it at all and stuff.
Absolutely, and that's really the big difference between your short-term rentals and your long-term rentals is that the long-term rentals is more passive, and depending on your income, you only can deduct so much.
Exactly, or even just investing passively in deals, right? So a big part of what we do is syndications and funds, and we have guys like that as well, right? That make really great money, doctors, lawyers, business guys and stuff, and they want to invest, but they want to try to take that passive investment loss that we could pass on and try to use it against our active, and it doesn't work that way, unfortunately. But it goes back to truly the value of real estate is direct ownership, right? And you're talking to a guy that, hey, I'll take your money, right? I want to continue. I want to give you a great return. I'm going to give you all these things. But the reality is, and I'm always upfront, I'm a straight shooter. It's if you really want to grow wealth, real estate is actually one of the best vehicles you can absolutely put your money into.
100%. Talk to me about syndication and in the fund that you have. How does that work? To a lay person that doesn't know anything about syndications or funds, how does that work, and how do you work with individuals on that?
Yeah, so the easiest way to explain it without getting too in the weeds, it's almost like real estate investing, the stock market, but you're not, it's not showing up on TV. You're not getting the prices up and down, but also it's pretty illiquid, right? So buying a house or a rental property. You're going to put that money away for a minimum 3 years, most times for syndication or fund, generally 4, 5, 6 years, right? But the benefit of doing that is that if you don't want to be an active investor, you go to a sponsor, right? Somebody that has a syndication or a fund, and you can invest with them, and they go out and buy real estate assets, and that's everything from self-storage to mobile home parks, multifamily, short-term rentals. So a guy like me, and I can give you a great return on the money as an alternative, or just diversifying from being in the stock market or buying bonds or even crypto and stuff, right? So it, in a lot of ways, it's about just being really diversified in the money that you have out there, right? Because you're always taking some level of risk. And if one thing tanks, generally something else is going to go up if they're not inversely correlated or whatever. But yeah, it's really as simple as that. And it's just not something, it's something that's regulated by the SEC and all that kind of stuff. So just make sure you're going with people that actually know what they're doing and actually have a track record and all that. But it's a great way to also get exposure to real estate, especially at the very beginning. Maybe you don't really know a lot about it, but you've always wanted to invest in short-term rental properties, but you don't want to do it yourself. So you can go with a guy like me, say you want to invest $50,000, $100,000, and throughout that journey, you see the process. You're really closely aligned with, all right, this is the property we're going to go buy. You're going to see the whole transformation process. You're going to see the inner workings of how the property operates, if you choose to. Or you can say, no, I don't care. I just want the return. You can sit back, right? But it's your choice, but that gives you exposure without actually doing it yourself.
So one of the questions I would have, if you're going to invest in the fund, are you on title to these properties? Do you have any security interests?
Yeah. So you have an equity portion in that property, no different than buying Amazon, right? When you buy Amazon stock, you are technically an owner of Amazon. There's just a lot more shares out there, but so when you go to sell the property or refinance, you participate in that upside of appreciation, and you also participate in the tax benefits, the depreciation come the end of the year. So that's the cool part. It's just a passive designation. So to go back to what you were saying before, there's a difference between, the active investing of doing it yourself or forming a joint venture or partnership versus kind of the passive side of putting your money in a stock. You're not going in and talking to Jeff Bezos and coming up with strategies for the next 10 years for Amazon and stuff, right? But you are a true equity owner, and when the stock goes up, you participate in that increase.
So you
That makes sense?
Yeah. So you make money on the cash flow. You also make money when the property sells.
Exactly. So you are a true equity like stakeholder in these properties.
And you get a portion of the depreciation.
You do.
As an investor.
And it's all just proportionate to the amount of money you put in, compared to like the total raise of that like fund or syndication.
Is there like a certain kind of like range of returns that are typical?
Yeah, everything's pro forma, right? So it's like you're like at the front end. So I'll kind of give you a quick distinction between like funds and syndication, right? So for syndicators or sponsors, guys like me, it's kind of pick your poison, right? So it's a syndication really is, hey, it's a designation of like, I know what properties I'm going to buy first, then I'll go raise for it, right? So let's say I wanted to buy 5 residential properties. We're turning them into short-term rentals, but these are the properties I'm going to acquire, and I will put that together and say, hey, investor, would you like to invest? These are the properties. This is the pro forma.
Gotcha.
This is what we think it's going to do, right? Within this range, 8%, 10%, 20%. Do you want to invest? Yes, no.
You invest in that specific deal.
Those specific things. Where the fund is a little bit different, right? So generally speaking, anyone can start a fund, but you're generally going to get people that actually have some sort of track record to kind of like point to. And that's why I like the model. So now you're raising up front saying, hey, this is what I've done before. This is what I really like to do and stuff. And anytime we see those properties, we're going to take advantage of it, right? And having that cash available from the investor allows you to go out and do that, and it's the same thing. So it's kind of just picking which one you're more comfortable with.
So you do both?
Yeah, so I do both. Right now I'm just doing funds, but getting into the business, especially moving into, starting off in multifamily, moving into short-term rentals, like on the residential side, like syndication is what I started with, because it's a little bit easier to say, hey, where the properties are, this is what I'm going to buy. And it's just a little bit, it's trust, man. Yeah. When it comes to raising capital, all this stuff comes down to is trust, right? Are you competent? Do I think you're going to screw me over? Right. Do I think that you're not going to steal my money? And if all those check boxes are yes, then generally people will invest with you, man. And that's the beauty of it. But also, too, that's how people get burned, because there are a lot of people that play it the wrong way, too, right? You get the Bernie Madoffs, you get all these, there's countless examples of that. So,
100%. Wow. That's really cool stuff. Now, so the properties you're buying now, I know we talked about this before, and I think it's, I know my thoughts are on it, but like in 2024, and I have some short-term rental properties as well. Mm-hmm. I think we've seen the market kind of shift. And you talked earlier a little bit about experiences.
Yeah.
And I think that's generally the trend, is what I'm feeling and seeing, and from talking to you. Talk about that. So in the world of short-term rentals, when it comes to, high-producing properties, talk about experiences.
Yeah, so I think short-term rental space has very much changed, right? I think it's still very new. It's in its infancy, but early on, people got into this business or this space, and you could pretty much throw anything on the market and it was probably going to do pretty well, right? It was just new. I think like anything else, as the industry starts to mature and more people get into it, I think COVID was just like an impetus for really that ratcheting up of just like, you go to some markets now and there are like thousands and thousands of properties. But I tell people, if you know what you're doing, it doesn't really matter. As long as you're not getting into like, you're not going to Miami and then buying like a 1-1 or a 2-2. Like, it's probably not a great decision because it's hard to stand out. But if you're actually giving your customer or your guest like an actual experience, something noteworthy that you're going to get a great review, it's unique to other properties, you can really distinguish yourself from the other operators in the space. And the reality is, like, I think the number is still true. It's like, 85% of, quote unquote operators, if people want to say that, like, own less than 3 properties, right? Like, this is a mom and pop side hustle thing for them, right? Like, there are very few true, like, operators that treat this as like a real business that's trying to scale and grow. But if you do that, like, there are things that you can look into and really understand the demographics and like what they actually want in that market. Right. And if you're catering to that, just like any other business, right? Like, if you're an entrepreneur, you're a business owner, like, you're just figuring out what does my customer want? What do they need? Right. Especially from an amenity standpoint, from an experience standpoint, you can do really well, but also it's created an environment now. It's like, if you're not doing those things, you're probably not going to do very well.
Yeah, and I think that's what people are looking for too. It's like, what are your options? Like when we travel, It's like I have 2 kids, wife, so it's like either we're getting like 2 hotel rooms, kind of dealing with that, or you're getting an Airbnb, so like those are your options. And a lot of times, like if it's an Airbnb, you get it's just a more homey experience. You can get your food, you can cook,
I think that's the best part about it,
laundry.
right?
Like my wife loves to do laundry while we're on vacation.
Yeah.
Especially when you have kids, they blow through clothes like crazy.
Like, yeah, absolutely crazy. Especially young kids. And it's like, a couple outfits a day. It's funny. But that's what I love about it too. And I think that's one of the other cool things. It's like every kind of generation has their own quirks and like different things. And, and I'm always honest about this, man. Like, my wife and I, like, we're hotel people. We stay at the Four Seasons. I stay at the Ritz, even though I'm in this business. Yeah. But there are a massive population of people that don't want to stay in hotels. Like, they want to stay in an Airbnb. They don't want to check in at the front desk. Like, they want to cook. They want to do their own laundry and stuff like that. Yeah. I'm fine giving it to the guy and having him just like take it and do it. But, it is what it is, right? And I'm happy for those people because they come to my properties. But I think it's a really cool thing where now you have those kind of people out there, and it's like now you just need to kind of cater to them and what they need. And that's why I think, again, a part of our strategy has been one of many. We love larger homes. So I started off doing smaller properties and condos. I don't really buy those anymore. Like, I want to go after that $1 million, $2.5 million house, add value to it. Because one, if you think about appreciation over a 5-year period, if you're buying a $200,000 house, that 10% isn't a whole lot. Right. You do 10, 15% on $2 million, you're actually start really locking in some real money now, especially if you talk about raising capital, all this kind of stuff. So, and there are no other options, right? Like, you can go get 3-4 hotel rooms if you're traveling with like a large family, or let's say 2 families want to go together, or you can go stay at a large short-term rental property, might have 2 kitchens in there, multiple laundry, like washing machines, dryers, and stuff like that, and just really create that experience like you got somebody forever. Like, anytime they come down to, Cocoa Beach is one of the areas we're in, or, Jacksonville or something like that, like, they're going to want to stay at your property or property similar to that, right? And there's actually not a whole lot of competition out there because most people are going to buy what's the cheapest thing I can buy and then try to make this work.
Right. Now, what would you say like the top 3 experiences would be? If you want to, let's say you have an Airbnb, it's kind of an average Airbnb. And what are like 3 experiences you could maybe add to your Airbnb to get more bookings?
Yeah, I would say 100% concierge service. I think that is something that's very new and unique. And when you can actually have someone come in and like in a digital format, so it actually isn't really that cost prohibitive to anybody. It's like there's companies out there that will find really unique situations or like experiences within the area, and you can digitize it. And it's a call center, what's a profit center for the host as well, because if you're sitting in that person's business, this is almost like Groupon, right? Like, you get a piece of that, and that's another way you can make money, but also really give your guests a high quality experience. And if they go see something cool, like, they're probably on social media, they're going to tell other people about it, or they're going to give you a great review, right? That's one. The easy one, hot tub and sauna. For even in Florida, like we do saunas now in most of our properties. People just goddamn love saunas, which is okay, cool, right? And there's a lot of pretty inexpensive options. Like, there's some barrel saunas and stuff for $3,000-$4,000. So I would always recommend getting something in cold places. That's always a hit, and that's a win. I don't invest anywhere where there's snow, but that's just me. What's the third one? I would say so. Those are good experience standpoint. Yeah, and I think it kind of goes into it too. So our property's near the water. Love partnering with like jet ski companies, boat rental companies and stuff. If you have a dock, even better, where you can coordinate with them to where if they want to rent a boat for a day, they come right up to you. Like, people love that stuff. Like, that's the best, man.
Nice. I love it. Yeah, I mean, it's like, how can you take some of that Ritz-Carlton experience and bring it to your STR? Like, I remember the first time I stayed at a Ritz-Carlton. Actually, my very first mentor when I was young, I was probably 19, 20 years old. He's like, listen, I want you to go stay at a Ritz-Carlton. And so he sent me to one, and he told me, let's talk about it on Monday. But I remember pulling up to the Ritz-Carlton, talking to the valet shortly. Obviously figured out who I was, asked me my name, looked at, figured out who I was. As I walk in, literally every person greeting me by my name. He radioed it in from his like little mic. Mr. Brown, how are you? Oh, we've been expecting you. Thank you for coming. Oh, by the way, I see you're here on a business trip. can I get your shoes? We'd love to shine them for you. It doesn't cost anything. We'll just drop them off here. We'll take them to your room later. Like, just unbelievable experience from like start to end. It's just going that extra mile, like a little bit over the top. Have you found it like hard to implement any of that type of stuff in, especially as you scale, right? Because you're not like dealing with the customer service individually. You now have a team.
Yeah.
Like, how do you still make sure that you're bringing that type of
yeah, no, I love that. I think that's such a great illustration of like why those places do so well, but more importantly, you're able to charge that premium, right? Like, that's what that's about. And it, even if you spend a little bit more or a lot more than you would normally, you generally walk away from those experiences being like, it was worth it. Right?
It. Yeah.
I think one of the cool things, like one of the places my wife and we like to go is down to the Boca Raton, right? It's the South Florida one. We love that place. Like, the customer service, the experience is always great, similar to a Four Seasons and stuff. Yep. So that is something we try to do in our properties. Like, look, you'll never get that level, but the cool thing is most people that go to a short-term rental aren't looking for that. So even if you have your team, whether you do a virtual assistant, you have a whole team that's dedicated to kind of guest like communications and services, it's just having those touch points in place, right? Of like having that welcome message before you get here, like maybe 3 days before, then the day before, right? Nothing excessive, but just saying, hey, excited for you to come check it out. We have X, Y, and Z lined up for you. Having your cleaners do like personalized notes when they leave. And that's something really easy that you can just talk to your cleaner with, like actually writing like, this is the guest that's coming in, writing their name down, welcome, having a bottle of wine or something like that. So, and then having those touch points throughout like your stay. And not only to make your guests feel good, but also too, you can really help out from a business standpoint of like, if you can solve or identify an issue early on, right, you're much more likely to be able to solve it and prevent that from being a negative review, right? So it's like these kind of symbiotic things where you're giving these great touch points, you're creating that experience and making the customer feel appreciated, because we do appreciate them. Like, you're coming and staying in this property, paying dollars for service, and we want you to enjoy the time you're here, right? So, so it's never going to be exactly the same, but yeah, you can do the certain things to really make the guests feel welcome and enjoy the stay, and it's always win-win.
That's awesome. What are your thoughts on the difference between Airbnb, VRBO, direct booking?
You
kind of post them all.
We post them all. I mean, yeah, we post them all. Like, there are a couple properties that we have that we will heavily focus on, maybe other like a different platform than others, but generally they're going to be on across the board. I think direct booking is something that I haven't seen anyone really solve for. Why are you going to spend those marketing dollars where the whole idea of Airbnb, VRBO, homestays, booking.com, like, they are your marketing dollars, right? Like, that's why you're paying that fee. They're giving you a customer and making you visible. So, but I think in the future, it probably will be something that a lot of folks focus in on, especially from a kind of a branding perspective. I think there's massive value in creating brands. I think, we're here now, right? Like, social media, getting your message out, people actually identifying you or your brand as, like the Four Seasons, right? Like, you think of that, it's quality, right? You're going to get there's a certain expectation of when you go and stay there. So I do think there's massive value in building that, but I haven't seen anyone really do that well yet.
Yeah, you see that sometimes in like these vacation markets, where you have like certain brands, like larger brands, but also it feels like you lose a little of that personal touch too.
Yeah.
You're dealing now with a brand instead of an individual.
And it's different too, in the sense that a lot of times when you're seeing that, you're seeing larger property management companies.
Right.
And, not to knock property management companies, but I'm going to, or whatever. Like, most of them suck, man. Like, that's just reality, but it's always down to ownership. It's one of the reasons why I love America and like that value. It's like, when you own something, there's a certain level of detail and touch and care that you're just going to put into it versus a company, and they're not all bad, but like, they're never going to care as much as you. Like, if you actually own the property, say you own just 2 or 3 properties, right? Like, you're going to care for those 2 or 3 properties much better than like a Vacasa that owns like thousands of, or it's managing thousands of units. Right. Because for them, it's just a volume game. Like, how many properties can I get and manage? Because at the end of the day, they're getting their fee regardless, right? Like, you might not be able to make your mortgage, but they're going to get their fee. Yeah. And so that's where, so just be careful of that when you see, and some of them probably are good. There's some like really I think like more niche markets where, somebody's come in that's, either a property manager or maybe an owner, but like just really understands that market and does that. But largely you won't see that like across the country.
At how many units do you feel that somebody would either need a property manager or an assistant or start to outsource?
It's all based off of like how much effort you want to put into it, right? So I think in my education program, it's called STR Millionaires. And what we do is, and I found a need not only from an education standpoint on just short-term rentals in general, but for the folks out there that want to do it themselves, right? Like I really preach like, this is active, but you can make it passive if you set processes and implement things like virtual assistants and utilize all the software out there, whether it's Guesty or Hostify or Turno and all these different things. And because a lot of them, they all kind of communicate with each other. But to answer your question, it just kind of depends on the individual. But once you get above like 5 or 6, like you're probably going to want to start actually building out a true team. Because you have 1 or 2, like the only team you need is a maintenance person, probably 2 maintenance people, right, that are part-time, a dedicated cleaning company or a cleaner, and some property management software. You really don't even need that, right? You just need all your all the platforms that are connected. They just need to be connected with each other because they'll all talk to each other, and like, VRBO will block it out on Airbnb, vice versa, when somebody books and stuff.
Right. Yep. Yeah, I mean, and that's kind of the same with that software too. Like, usually like 5 plus, you should probably start getting like a property management software.
Yeah, you should definitely get property management software for sure and stuff. But it just depends on like what's the level of participation do you want to have, right? The gift and the curse of the short-term rental space is like, man, if you're doing it right, you know what to look for. There's so many different ways to increase your top line revenue and keeping your expenses relatively the same or even like reducing it based off of like efficiencies, right? Property management companies know that, and there is a lot of activity that's involved in managing a property. I mean, you're managing effectively mini hotels, right? So whereas a long-term rental property manager, I don't even know what the rates are. I don't know, maybe 5%, 7% or something like that. Right. Most of the property managers on the short-term rental side are going to be 15, 20, some 30%, right? You talk about the real big boys. They're really eating into your cash flow, right? So the whole reason of doing this is for cash flow. So I'm a huge advocate of self-management, but you have to be willing to put those processes in place.
Yeah, they're going to get paid whether you get paid or not.
Exactly, right? So it's like you might as well figure it out yourself, right? And then take advantage of it because it's yours.
Tell me about your training program. Is this something designed like if maybe I own my primary residence, but I want to maybe buy short term, get into investing. Is it geared towards that person, or is this geared more towards somebody who maybe has properties they want to scale, or both?
For both. I mean, really, it's geared towards someone that has really no experience in real estate whatsoever, right? Like, I'm really about just keeping it as simple as possible. So, similar to the military, man. Like, one of the things as well I got out of it is just like process focus, right? Like, I'm just huge on following the blueprint. I'm not here to recreate the wheel. Like what is the process? What are the steps? Okay, step 1, step 2, step 3, I'll implement, right? So I created the program exactly like that, and it's called the Millionaires Blueprint, right? So, and I made it as blatantly obvious as possible. Like, I am a millionaire because of real estate. Here's my blueprint, right? Like, no shame in it, right? Because it's the truth. Like, my wife and I have created an incredible life because of real estate, and that's why I'm so passionate about it. But it's because of short-term rentals, right? And I'm just a huge advocate of like taking action and just like whatever you're fearful of, like if you want something in life, man, you got to go after it, right? 100%. And confront that fear. And a lot of people are like they're fearful of the unknown. And it's like, all right, well, if that is really holding you back, because it's not about information, right? You can chat GPT most stuff out there, right? Like it is who you like, just the fear of unknown. Okay, I'm going to make it easy for you by saying, hey, this is step 1. Yep. This is how you look at a market. These are the things you need to look for. Go do those things. Come back, go to step 2, right? And it goes throughout 10 modules, everything from how to finance a property, the different type of financial vehicles that are out there, from what you guys do to hard money loans, all that kind of stuff. And then once you actually find the property, you close on it, then we walk you through how do you optimize it, how do you manage it without the headache. And that's really what it's all about. And some people go in, they take down their first property, then they start scaling. Awesome. Other people say, this is way too much work. Now they're at least educated on it, and then they could come invest with myself or somebody else in the real estate space and actually have a higher level of, knowledge of what the space is all about.
Nice. What's the website for that?
So it's STR Millionaires with an S.
STRmillionaires.com?
Yeah. You can Google it, www.strmillionaires.com, and
Cool. Yeah, we'll link it below as well. Yep. And then we'll also link to your fund. Last thing, just touch on, what does 10 years from now look like for you?
That's a good one. What is 10 years from now? So continue to scale the business and grow. I want to have 10 years. I'm more of a short-term guy. I have 2 years from now mapped out. But probably about 500 million in real estate's assets under management. I think one of the strategies now, and again, every market has different opportunities. We focus in on kind of the boutique hotels. Yeah. So that's what we've been acquiring lately. We actually have one under contract in Fort Lauderdale, which is really cool. And that's going to be a really heavy value add one, but it's it's exciting. Getting into some ground up development, some glamping stuff. But for us, it's about really putting ourselves in position, my wife and I, to live life the way we want to live life. And we're doing that now, but we also have massive ambitions to grow our businesses, to have our kids watch us do this. That's one of the driving forces for me. I'm really huge on creating your own destiny and living how you want to live. To me, it's 100%. The military was great for that time of my life, but it's I want to control what the hell I do. Right? You hit me up and it's hey, you want to jump on? And you give me some time. It's yeah, I can go do it because I can control my time. So everything is driven towards that, right? And being able to travel and spend time with my kids. But from a professional standpoint, it's growing the business, continue to grow our community and stuff. And then our foundation is something we're passionate about, helping families, caregivers, parents have financial literacy and pass it on to their kids so you can set them up to have them live the life they want to live, man. There's too many people out here working jobs, doing things that they are absolutely miserable with. And it doesn't need to be that way, especially not in America, man.
How old are your kids?
Jesus, 15, 11, 6, and 2.
Yeah.
Try, bro. Yeah.
Yeah, you get the full range there.
Yeah, man, it's cool. And,
so cool.
Another one might be on the docket, too. You never know, bro. So, but that's what life's about for us, man. It's fun.
That's right. It's funny you say that because, that's how I feel, too, is, I want my kids to see excellence, and I want them to see the drive, and I want them to see the motivation. I want them to see that, and I want them to see that they can wake up and they can choose to do whatever they want, but they got to make that choice. Mm-hmm. And that's why I love America. That's why I love where we live. And that's why I love what I do every day. I wake up so excited to do, to help clients, buy homes and finance and do real estate deals. It's just something that I love. And I want my kids to see that too. And that's the driving force behind, me as well.
Love that, man. Yeah. And I can feel that from you, bro, because it's something it's incredible and we're really fortunate to have. And more importantly to me, I think a lot of people tell their kids they can be whatever they want, but I think kids really learn from modeling. And, you're telling your kid you can be the president, but you're settling for a bullshit ass job. Right. That's the reality, right? They're not actually seeing that. So we also want to walk and talk the talk. And that's what our kids learn. And I think that is the best way of really showing them, you can do whatever you want because mommy and daddy are doing what they want.
And talking to your kids about money.
Yeah,
some
100%.
people don't talk to their kids about money. You got to teach your kids about money.
Yeah.
My daughter's 9 years old. She's giving me tips. She's hey, Daddy, I think we should do this. Maybe we can get a little bit more money out of the Airbnb if we change this, or here's some idea. I'm that's a great idea.
Yeah.
Why don't we have this in the Airbnb? Why don't we have this? And so I love how their minds are thinking. My son the other day, he's 6. He was well, Daddy, I want a property that makes me money. I'm well, you got to be 18. He's well, what do I need to do to get this property when I turn 18?
Yeah, 100%.
Okay, these are great conversations to have at 6 years old.
100%. Yeah, 100%.
They're cute, but but it just shows a point out. I'm not afraid to talk to them about money, about investing, about saving money, not spending money. My daughter's always concerned about Daddy, don't spend money on that. Let's save our money.
Yeah.
Good point.
Yeah, no, 100%, man, because that's the foundation right there, right? And they're going to take those principles on and build the rest of their life based off that foundation. And that's why it's so important it has to come from the home. It just does.
Yeah, 100%. Yeah, I know people talk about generational wealth and things like that, these catchphrases, which I think is awesome. I love generational wealth. I think that's a great thing. But I think the real wealth that we can give our kids is teaching them about money and about investing, because that wealth of knowledge will make them successful their entire life and then allow them to teach it to their kids.
100% agreed. But it only works if you're modeling it too, right?
Yep.
So that's the only caveat I would say. Like, I think education is incredibly important, but like there are a lot of people with education out there. Like the action to me is almost just as important, if not more, right? Like I'd rather my kids go off and just try stuff without the education and learn along the way versus like having all this knowledge and like not doing anything with it. Because like there are millions of people out there with that, and it's like it's useless if you're not executing.
Love it. All right, let's hit you with a couple rapid fires and we'll wrap up. So what's your favorite hobby?
Favorite hobby, probably working out, man. like legit. That's it, man. I enjoy it. I love it.
I love it. Best stress relief there is. Favorite business book or podcast?
Favorite business book. I'll go with Cash Flow Quadrants by Robert Kiyosaki for sure.
Yeah, awesome. Solid one.
Even though everybody hates him now and stuff like that. But, you know, it is I don't know what he's doing like in the news and stuff. Like, I guess he's rattling some feathers. But, like, that thing changed my life. So it's like I'm always going to salute Robert Kiyosaki for
so
sure.
good. So good. Just such a good book. Lunch with one person, dead or alive?
Ooh, that's a good. Actually, Tom Sowell, who's an economist who got me into economics, that kind of started that journey when I was in the Navy. So, yeah.
Oh, cool. Nice. And who inspires you?
Who inspires me the most? That's a good one. You know what? 50 Cent, for sure.
Yeah. Why?
I think there are very few people that come from that kind of environment that a lot of people like me come from, that are able to maintain who they are and still do all the incredible things that they want to do in life, man. And it's like, I respect the heck out of him. Like, I think he's opened up a studio in like Shreveport, and he's always remained himself, man. Like, to me, it's like having that level of integrity and like authenticity is like incredibly important. That's probably why I was never good fit to be in corporate America, man. Like, I'm always going to be me. And it's like, I respect that he stands on who he is and his values.
And best business advice you ever got?
Be fearless.
Love it. Yeah. Cool. Justin, this was awesome, man.
Awesome, man. Appreciate you
coming in, brother.
Yeah, man. Thank you.
Yes, sir. Bye, guys.